welcome to this another episode of ECCB Connects. This week we'll be speaking with Monique Franks, Research Officer in the Strategic Planning and Projects Department, about the Eastern Caribbean Partial Credit Guarantee Corporation. Stay with us, we'll be right back.
Bonjour, moi c'est Milia Joseph Hod Dominique avec ou kagade ECCB Connects qui ka ende protéger l'argent et développement région.
Monique, welcome to ECCB Connects.
Thank you, Shermanan.
Monique, the Monetary Council at its meeting in February this year approved the establishment of the Eastern Caribbean Partial Credit Guarantee Corporation, and this entity is seen as a pillar in the promotion of economic growth of the ECCU member countries. What's the main objective of the corporation?
The Monetary Council would have decided to establish the Eastern Caribbean Partial Credit Guarantee Corporation with the assistance of the World Bank. The main objective of the ECPCGC, which we commonly refer to it as, is to improve access to finance by micro, small, medium-sized enterprises. What it does, it will provide a partial guarantee to financial institutions on loans that the financial institutions provide to MSMEs. What this means is that by offering a guarantee on loans provided to MSMEs, the ECPCGC is actually making it easier for businesses in the region to access finance.
Yes, and this is very important, Monique, because we know that there are issues with small businesses accessing finance. So we get into why the real need for such a corporation at this time.
Well, over the past several years, we have seen in the region a declining trend in credit to private sector, particularly in the case of credit to businesses. And we have seen this particularly in the aftermath of the global financial crisis, where financial institutions would have become more risk averse as NPLs rose. And so the ECPCGC is actually intended to address that problem, where MSMEs are typically viewed as risky by financial institutions. This is particularly important given the contribution that MSMEs make to economic development in terms of increasing employment and promoting innovation. Despite their importance, however, these businesses are typically viewed as high risk by financial institutions. And this is due to a number of factors, particularly relating to information asymmetries, whereby they may not have the adequate financial information required by the banks, or they may not have a business plan that meets the standards of financial institutions, or in most cases they may not have the type of collateral or adequate collateral to meet the requirements of the financial institutions. And so to address this gap in financing to this particular sector, the member governments are seeking to establish the ECPCGC to sort of address those issues and make it easier for small businesses in the region, given their importance, to increase access to finance and facilitate economic development and growth.
And how will the corporation actually fulfill this mandate?
The ECPCGC has a business model which is still being finalized. However, what I will do is I will highlight some of the key features of the proposed business model. In terms of the maximum guarantee coverage, under the legislation, the maximum threshold is set as 80%. However, the proposed guarantee coverage is 75% based on international experience. The maximum loan size will be in the region of 300,000 EC, and the maximum tenor of the guarantee loan will be 10 years or shorter if the term of the loan is shorter than 10 years. In terms of how it will work, borrowers, MSMEs, are still expected to go to their financial institutions to acquire financing. What will happen is that once an MSME goes to the financial institution for financing, the financial institution will still be expected to undertake the credit analysis and credit underwriting, and adhere to its credit policies in terms of risk management and so forth. Now, in doing that assessment, the financial institution will then determine whether the loan application should be sent to the corporation for a guarantee. What will happen if that is the case, the financial institution will submit an application for a guarantee for that loan, and this will be done electronically through our web portal. So the interface really is between the financial institutions and the ECPCGC, and not between the borrowers and the ECPCGC.
Okay, so small businesses still have to go to their financial institutions to access this guarantee and go through the same loan application process.
Precisely, because what we are doing is that we are leveraging our financial system to provide the access to finance to MSMEs. And so in doing the analysis of the loan application, the financial institution will determine whether or not that loan should be sent to the corporation. If that is the case, and it is sent to the corporation electronically, the corporation will then do its assessment and the necessary due diligence in terms of processing that application. It will then make a decision whether or not it will approve the request for guarantee.
So Monique, the small businesses still have to go through the normal loan application process, and we've identified earlier that this is one of the main issues, that small businesses are having difficulties accessing finance from financial institutions. However, here it is, you have the corporation and they still have to go through the same process. What is now going to make it different or easier for small businesses to access finance?
Well, the ECPCGC is intended to address the risks that are faced by financial institutions in lending to MSMEs. And in providing a guarantee to loans that are provided to MSMEs, what it is doing is actually seeking to reduce that risk. A typical example will be an MSME which goes to a financial institution that has adequate cash flows, but for whatever reason may not be able to meet all of the requirements of the financial institutions to secure a particular loan. And in this case, it could be a lack of collateral or the type of collateral. And so what the ECPCGC can do is to fill that gap by substituting the guarantee for the collateral that is required. So in that sense, it is actually improving the likelihood of the MSMEs in being able to get financing from financial institutions.
So the banks will now be more open to lending to small businesses,
Yes.
small and medium size.
Yes, and that is expected. However, as you would note, it is not a full guarantee. It is partial credit guarantee, and that is important to note.
And you did say the proposed percentage is 75%.
That is correct.
Monique, how far along are the preparations for the actual establishment of the Eastern Caribbean Partial Credit Guarantee Corporation? What has been done?
Well, we have come a long way in this process, which started a few years back. A critical milestone would have been the approval of the agreement to establish the ECPCGC by the Monetary Council. We would have undertaken a number of activities within the last year, and these include conducting public education and awareness in the participating member countries. We would have been also collaborating closely with the World Bank on the business model, the financial model, and the operations manual for the corporation. The current activities are focusing on the next steps for achieving operationalization of the corporation in 2018. And these include the appointment of the board of directors, meeting the necessary legal requirements as established in the agreement for the establishment of the corporation, as well as the necessary activities and requirements for obtaining the funding for the corporation, also the implementation of the operational structure and framework for the corporation.
Monique, who will fund the corporation?
The corporation will be funded by participating governments.
Monique, I am pretty sure that small businesses in our region are looking forward to the operationalization of the Eastern Caribbean Partial Credit Guarantee Corporation, because it really does mean more access to finance, easier access to finance, and really the growth of the private sector and small businesses.
Well, certainly, Shamilan, the ECPCGC is seen as a very important initiative for addressing some of the gaps that we have in our current financial system, particularly those relating to access to finance by MSMEs. And it is also a very important initiative that is identified in the ECCB strategic plan in relation to Goals 2 and Goal 4, which speaks to the diversification of the financial system and promoting economic growth in our member countries.
Monique, thank you very much for speaking with us on ECCB Connects.
Thank you, Shamilan. It was my pleasure.
You're watching ECCB Connects, protecting our currency, developing our region. And now for this week's financial tip.
Hi, my name is Danielle Francis, and I represent the General Employees Cooperative Credit Union Limited in St. Vincent and the Grenadines. Have you prepared a will? Having a will helps to ensure that when the time comes, your belongings are distributed to whom you want, how you want, and when you want. It also helps to lessen the burden on your loved ones.
To view any episode of ECCB Connects anytime, any place, at your convenience, check us out on YouTube or Facebook at ECCB Connects.
We've come to the end of this week's episode of ECCB Connects. If there's a topic you'd like us to discuss, message us on Facebook or drop us an email. The address is at the bottom of your screen. See you next time.